what a crazy market. Let's face it, they will talk about this in finance classes at universities in the years to come. Wow. But we also have some really interesting signals. Let's talk about the two top mistakes you must avoid right now. The number one sector for 2025 to invest in: weakness and another short signal. Ooh, this is gonna be bad. Let's talk about it.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month.
Okay, so we start off with the stock markets. We have to take a look at them, obviously. So this is the S&P 500. Let's put it this way. On the positive note, we're still above the uptrend from 2020, as you can see, and this double support zone. That's the positive. The negative is, and the second positive would be, look where the RSI is. We are as oversold as we have been peak COVID panic 2020. So is the world today in as bad a shape as it was at peak COVID panic Q1 2020? Absolutely not. Let's face it, right? We're basically one Trump tweet away from the world going back to normal. Now, the Trump tweet doesn't happen, but the option is there. We didn't have that option in March 2020 when we thought the world is going to end and everybody was going into lockdowns and nobody knew what was really going to happen with the economy. But yesterday obviously was a tough one. The strong bull day that people thought would happen, the relief rally, didn't happen at the end, and that is something that we need to take into account. What does this tell us? This tells us uncertainty will still be really high. Yes, obviously you want to buy this weakness, and this is the number one mistake that you need to avoid right now, and that is turning your back on the stock market. Obviously, you wouldn't be watching this channel if this would apply to you, but I cannot reiterate this enough, right? The biggest mistakes people make, and I've been through half a dozen of these crises and events, is they turn their back when the market has crashed, right? Yes, it might go down even further, but this is a great opportunity, a great buying opportunity in the right sectors, and we get to that one in a minute. Now, we need to look at oil. This is not good at all. Look what happened. Things were looking okay. Let me take this out. But we're like, okay, are we stabilizing here? We were oversold, right? Now we're massively oversold. We're oversold. And look what followed. We broke back down. If this holds, and it will, or I'm not saying it will, but it looks like it. What do we have here? Confirmation of the breakdown. And now we're talking about what I've been telling you now for weeks. I'm telling you about the breakdown. This is the next target on the downside, 52. But where we're really going is right here. This support zone down here, around $40. This is what the charts tell us. Should we get a relief? Could happen any day. That's why you don't want to short the oil price right now, besides options being crazy expensive now. But the signal, clearly, you see it here on the weekly, is there in oil. And again, this is in the interest of the Trump government, right? This is positive for the Trump government. It will take pressure, inflation pressure off. That's what they need to go back to QE, to lower rates. So there'll be no support for the oil price from the US. Now let's look at the big winner. And the big winner is gold. It's up over 2% today. This has two reasons. The first reason, or three reasons, but the flight to safety is so obvious, I'm not even going to mention this. The second one is the dollar. Well, if you watch this channel, you know we have been talking about the dollar going down since here, okay? It's clearly going to go down. It will kiss the lower end of this sideways trend. It's only a question of when it will happen. And the weakness in the dollar, obviously good for gold. So that's the one reason. The second reason that nobody's talking about yet is US Treasuries. Now, usually when you have a crash in the stock market, people are hiding in bonds. However, with the trade war with China escalating, you start to see a fear in the bond market that the Chinese, who hold gigantic amounts of US bonds, might throw those on the market. And that would be devastating for the US financial system. Because who's going to buy these US bonds? And I think what we're seeing today is a reaction to this fear, people moving out of bonds and saying, where can I really hide? Okay, it's gold. Now, we need to watch this chart like a hawk, because while it's the best chart of any asset in the market, there is a risk of a head and shoulders pattern that we need to take a look at. But even if this plays out, we are basically, this would be the head. So let's put this down, let's say about here, like a 7% downside. So that's not the world at all. That's nothing. We also see quality support zones here. This old high is coming back into play. Horizontal support, lower end of the uptrend channel support. If we put in the 100-day moving average, also right there. So we have triple support around 2,800. That's the downside that I see in gold. And that's nothing compared to what other asset classes could offer on the downside if this really continues. So this leads me to the top asset class, the top stocks to invest in, and it is, to no surprise if you watch this channel, the gold producers. The gold producers are printing money right now. It's the one sector in the market where we have very clear perspectives of how their business is going to go. Because guess what? US tariffs don't mean shizzle for them. They just sell their gold to the BRICS countries. That doesn't matter. When I was in Zurich, all the calculations of all the companies for 2025, 2026, 2027 are based on gold price scenarios between 2,500 to 2,800. Any day that in 2025 that the gold price is above 2,800 and we're above 3,000, the gold producers are making even more money than they have shown or projected to the markets yet. Oil price is going down. So that means that on the cost side, on the energy cost side, the production companies are getting relief. Now, we're still going to have labor costs and all that, obviously, but that's a plus also. I'm not even factoring that in. I'm just telling this to you, right? The story is happening on the gold price and the sales these companies are going to make. So if we can get gold producers, again, not explorers, we can look at some advanced developers, but really the story is in the senior and the junior producers. They're going to have a stellar year. This is where the money is going to flow. These are the type of stocks that we want to pick up in weakness, because short-term gold mining stocks correlate with the stock market. That will happen. But the fundamental perspectives in the sector for the gold producers at gold prices over 2,800 are so good. They are printing money. So if the stock prices go down, there is a floor. There is a floor that, for example, the high-tech companies don't have, right? Because nobody really knows who's going to buy all the AI solutions right now. You look at the consumer companies. What is Nike going to do? What is Lulu going to do? Are they going to move their factories back to the US? Or are they going to keep them in Vietnam and just pay the tariffs? Uncertainty. Nobody knows it. With the gold producers, we clearly know all the facts. They are printing money at these prices. So therefore, the valuations put a floor under these stocks. We're going to use this, and this is what I've been doing. We're going to use this crazy time to step back and build our watch list for the best sector in 2025. Talk to you later. Bye-bye.